We got two choices. We can give 10 cents back in the dollar to any investor that put money in this company, or we can pivot and figure out something that we can take this incredible platform we've built and this incredible team we've assembled and actually do something that's going to make some money. They weren't as keen on my idea as I were. Coming out of the financial crisis, they seemed a little less bullish than I did on the idea of creating a debt marketplace. So we spent a bunch of money that we had raised on really a useless task, which is arguing with a regulator, because you don't win that argument and is always at your expense. I literally got a call on a Friday afternoon. It seems bad news always happens to me on a Friday afternoon. And on a Friday afternoon, I got a call from the partner on our file to say, hey, what's going on? What's new? And I'm like, well, let's get to the part where the bad part popped. I feel like that's coming. And then he was like, hey, I just want to let you know that we've made a decision to buy this other platform in the US that does this thing that we're hoping to do with you. And as a result, we're shutting your thing down.
Welcome to Tank Talks. I'm your host, Matt Cohen. And on today's show, we welcome Michael Garrity, Executive Chair and Founder of Financeit. And I'm also joined by my recurring guest, John Ruffolo. We discuss Michael's incredible career as an entrepreneur and how he has been at the forefront of Canadian Fintech for years, from his early days in launching CommunityLend to building Canada's largest point-of-sale lender for home improvement. On this episode, we dive into Michael's early childhood, growing up in Northern Canada, and how his experiences in labour-sponsored investment funds helped shape his views on company building. We dig into why his first startup struggled to gain regulatory approval and how his pivot saved his company from extinction. Michael also shares how his experience working with Goldman Sachs as his largest investor was both a blessing and a curse, and the lessons he learned from selling Financeit not once, but twice, and what founders should know about acquisitions. Next, we get Michael's perspective on Canada's political environment and its impacts on fintech, plus what he believes our country needs to change in order to win in this deglobalizing economy. This was such a fun episode to record alongside my good friend John Ruffolo, and we hope you enjoy it. Now let's jump into the tank for this week's episode with Michael Garrity from Financeit. All right, John, we got a special guest here. Welcome to the tank, Michael Garrity. Michael, thanks for joining us.
Thank you. I'm a little worried. But let's see how this goes.
I'll take it easy on you, but I don't know if John will. I mean, you and John have known each other for quite some time, but maybe for our listeners who aren't so familiar with you, can you give us a brief background, where you grew up, your early career paths before launching CommunityLend?
Yes, absolutely. So I was gifted by my parents a really interesting life to get started with. They were both teachers. They wanted to take advantage of the Northern Allowance, which is a stipend to go work in really remote places. So I was born in Churchill. We lived in the Northwest Territories. We eventually moved down in Manitoba. I lived on a First Nations community for a bit while they did some work there, and then ultimately settled in Winnipeg, where I did some schooling before going to Ottawa. And then in Ottawa, I started working in politics. I spent 93 to 97 at the House of Commons, and then left the Hill to help some folks start a labor-sponsored investment fund, so an early-stage retail-oriented VC firm. Eventually got me into tech, and then a couple of tech companies later, I started something called CommunityLend.
That was a pretty quick rundown, John. I mean, what is it about your parents that wanted to make you basically travel all around Canada where none of our politicians have even seen a tenth of the country?
And I think that a bunch of it was heart for my family. They're both super dedicated teachers. They wanted to help in remote communities, and so I love that about them. It was also money. The Northern Allowance is a way of making extra cash by going to places. They came from very modest means. And so they were looking for a way to build up a little nest egg for the family. So heart and pocketbook were their motivator.
Okay.
And a lot of hard drugs, I think, is what you had said.
Yeah, exactly. Yeah. But then this is before... this is before the internet, and before up there's no television. So I grew up, listening to records and 8-tracks and things like that. There are no other influences.
Right, exactly.
And so Mike, when they said to you, you guys you're moving south, and then you realized it was Winnipeg, what was your reaction?
Well, it sounded really warm, moving to where we were. We used to, we used to go to the DEW line. I don't know if you guys know what the DEW line is, the early detection warning system that tracks, missiles coming from Russia. And so we would go to the DEW line, which is an Air Force base, and we would watch movies, and the movies would be on big canisters. So we took the skidoo across the ice to the Air Force base to watch movies as kids, and then, put your 8 layers of clothing on to go back home again. So it really was a very interesting.
Wow, Michael, that's a full Canadian story right there. But, I want to double click on sort of your exposure to the finance world and investing world through these labor-sponsored funds. Maybe for some of our international listeners, can you explain what those were and what they were aimed at doing?
Yeah, because this is a political/tech podcast, I think that this is relevant, right? So labor-sponsored investment funds are originally, I believe, John, you can correct me, originally out of Quebec, as a way for the provincial government and the federal government together to encourage venture capital where there just wasn't venture capital. We all know venture capital is important to grow healthy tech ecosystems. There isn't enough in Canada for a bunch of different reasons. And the government said, hey, you know what? If we put some structure around how to make these retail-oriented, instead of relying on institutions to backstop venture capital, we can get retail investors selfishly motivated on tax credits to put money into this ecosystem. And so it was designed by politicians, and enterprising capitalists took it up and started creating these funds. I think a great idea. Ultimately, I think they were all a disaster in the end, including the one I was a part of. It got money into the system. Good, check a box. It got retail exposure to this asset class, check another box. Performance was abysmal, X on that box.
Yeah. Well, listen, and hence the name labor sponsored, because they started off on union-backed labor, and they just maintained it. But frankly, when people talk about an angel tax credit, this is in fact what it is. The tax incentive is at the front end, not at the back end of at the disposition time.
Yeah, and Michael, you are on the end. Go ahead.
Those sort of labor. I apologize for interrupting. That labor connection that they talked about in the end was perfunctory. Some labor union just signed on. You checked every box on investments that you wanted to make. It was probably the biggest joke of how the whole thing ended up getting constructed.
Right. But Michael, you're considered like a kind of a bellwether for consumer and finance and all that in this country, and your career started quite uniquely around this community aspect around finance. Maybe for our listeners who don't know how you got your start on the operating side, can you give us a sense of how you ended up launching CommunityLend and how it did not work out and eventually led to something else much, much bigger and more successful?
Sure. So expose all my failures on this recorded session. Sure, no problem. I got very, very interested I had been working in the confluence between internet companies and financial institutions for a few years. I was one of the founding team of a platform called ePost, which was an electronic bill payment and presentment function. And so I got a lot of opportunity to be thinking through debt and carried debt and banking relationships, and love this emerging idea I saw originally out of the UK in this company called Zopa, Zone with Possible Agreement, where you would create a debt marketplace where anybody who wanted a loan would come in and create an eBay type of listing, and any source of capital, retail, institutional, financial institution could come in on the other side, and you would make matches in essence. And the platform itself would do credit underwriting and categorization, syndication of the debt, manage collections and repayment. So it would do the functioning of a bank, but it wouldn't be providing the capital, the risk capital, and participating in the loans. And I love this idea. I saw it emerge in the UK. I flew over to London, met the guys that were starting it, got a sense of what was working and what wasn't, and then launched the first of its kind in Canada. Then I met some regulators. They weren't as keen on my idea as I were. Coming out of the financial crisis, they seemed a little less bullish than I did on the idea of creating a debt marketplace. So We spent a bunch of money that we had raised on really a useless task, which is arguing with a regulator, because you don't win that argument and it is always at your expense. So after about a year and a half of spending a lot of money and not generating any money, we agreed to a much smaller version of what it is that we wanted to do just so we could get live. And at that point, we had an esoteric crisis, which is we then had a model that wasn't going to scale. Anyone we showed the permissions that we had achieved to that knew anything about venture capital would immediately chuck us out of the office. One of those people is actually on the call and keep it. Yeah,
He's still bitter about that.
This Lord Claire did throw me out of his office for the idea. Wasting his time.
I think 2-3 times, perhaps.
Couple of times. Persistence. I kept getting chucked out. I think I started grabbing pens and things on my way out.
Hey, I think you grabbed a chair and you took it and you tried to sell it here at him office, but
do what you need to do. Do what you need to do.
Bag, borrow, and steal.
Exactly. And so I think enough of that negative feedback on what we had achieved and how likely that was to turn into a big business gave us enough pause to say, hey, we got two choices. We can give 10 cents back in the dollar to any investor that put money in this company, or we can pivot and figure out something that we can take this incredible platform we've built and this incredible team we've assembled and actually do something that's going to make some money. And so we were able, through a lot of pain and suffering, to pivot the business, did a convertible debenture round, which is an alternative to a down round, and got enough dough to get to another milestone around converting the business to something that we thought would be more successful. And that's where Financeit came from.
John, do you want to give your side of the story?
Yeah, no. What's interesting, who was the U.S. big dog at the time that everyone was freaking out over?
Lending Club or no?
Yes. Lending was Lending Club. And so people forget that this was another one of those, we're going to intermediate the banks. You no longer have to worry about spreads because you're solving two problems. People were looking for returns and people were looking for dollars to invest. So the idea of, really being the Napster of finance, it was a big, big deal, except the two issues, exactly what Michael said. The regulatory side of the equation was surprisingly the big impediment. And then, of course, raising peer-to-peer capital is no easy feat.
This is the regulatory capture idea that Bill Gurley articulated so well, but we've heard about for so long. You wanted to create a platform for the free market to interact with each other, and the regulators came and hammered you down and said, no, you're not out to help people. You're actually potentially going to hurt people. That 1% chance of hurting somebody basically diminished your chances of the 99% of people you could have helped create wealth or find access to capital at better means, correct?
Yeah, so that's fair. That is a fair assessment. And it was compounded. Again, this is a political show, so let's be political. It was compounded by the fact that there isn't one regulator. There is every single province has its own securities. Oh, yeah. Because the fundamental distinction was debt is a security. It doesn't matter if it's a $5,000 loan to buy a car or if it's a $1 billion issuance of credit card receivables. It's a security. And therefore, it needs an offering memorandum. It needs a whole bunch of babysitting of risk and risk parameter outlines and a whole bunch of other things that made no sense. And you didn't have to do it once. You had to do it 11 times. Because each securities regulator had their own opinion. And then they tied them all together at one point and said, you're either going to get all of us, weakest link of acceptance, or you can untether them and spend even more money and time and effort, which is ultimately what we did. We untethered and only got Quebec and Ontario as a starting point. So it's fair to say that that's an example of over-regulation to the point of ridiculousness. It's also fair to say that John's point was a good one, which is it's really hard to make marketplaces work. If you're chasing chickens and eggs at the same time, you're probably already losing. And so when we pivoted to Financeit, we had to solve two problems. We had to say, let's get rid of regulators, right? And they care about retail exposure. Let's get rid of retail exposure. Let's only get partner financial institutions that the regulators don't care about. Secondly, how do we solve distribution? Because one loan at a time isn't the way to scale to a multi-billion-dollar platform. We have to figure out how to increase the velocity of distribution. And so we ended up partnering with merchants who sell stuff every day and need a payment solution that's innovative and maps to their needs. And those two solutions, everything else in the middle that we had built stayed the same.
No, I was going to say, Matt, this was why I think Michael's business is very interesting. And this is the big learning lesson that I try to explain to a lot of founders. The art of the pivot. The pivot is extremely hard. And I'd say that there's two kinds of pivots. There is the big pivot. I am selling shoes and shovels and I want to be in a financial services business. Those are extremely rare and very unlikely pivots. But Michael was a product market fit and barrier pivot. And I call that the smaller pivot. And this is what I think is a great founder story of, all right, here were the 2 or 3 massive impediments. So as opposed to just basically packing it in, and Michael, I suspect you were getting pressure to pack it in. At the time. But I remember you coming back to my office. I think that was the 3rd time when you said, okay, hold on a minute. These were the problems. I am not banging my head, but I am going to shift these 3 things. And that's what became Financeit. And I think you don't see enough of these examples in Canada because you either bail out or you just say, well, I'll keep the money and try to do a completely new business. Michael didn't do that. He still had the same problem he was trying to solve, but he tweaked the dials.
It's such a great point, John. I was going to ask you, Michael, how did you keep the morale up when you were going to change the original plan and you had to pivot? And would you describe it as a small pivot? Because it doesn't really sound like it was that small.
Yeah. I mean, in terms of how do you keep morale up, having bourbon at your desk is super happy. And don't judge morning bourbon. Don't judge it. So having
us that starts taking that away right now. So you have to pick another
Canadian bourbon.
Yeah. Canadian.
Yeah. I like how political this topic. So having a sense of humor and having a sense of mission and purpose with what you're trying to do is essential in those moments. And I'll also say, don't be an ass. Would be the other way that I would tell you. There are lots of people who just sort of play what's best for me, what's best for my company, whatever. But when you hit hard times, everyone's going to abandon you if you're an ass. And if you're you try to be a good person, you try to care for your team, you try to have people's back, you try to make connections in the market so that even if you get checked out of John's office, he still takes them out of meeting. If you just avoid being an ass, you'll find that those moments of hardship, you can have opportunity, you can have room to move,
right? And
doors aren't getting slammed in your face.
What was the big make or break moment that convinced you Financeit was going to make it? Was it the first lenders you tied up with, like ING and Tangerine? How did you know this was going to be now one of the largest point of sale lenders in Canada for home improvement?
Yeah, I mean, those are 2 separate questions. I'll try to unpack them a little bit. As soon as we had made the pivot, and I don't mind calling it a pivot, as soon as we had made the pivot, we had a bunch of merchants who had been thrown off of platforms like Citi Financial or HSBC Finance that were doing point of sale lending, but those companies exited Canada in the financial crisis, and so we got lucky that there was a little hole in the market and we could fill it, right? So we immediately got out. We went to HSBC Finance's website and we backloaded every merchant they had on their search and just It was public information. We just wrote a little algorithm to be able to pull all that data.
Love it.
And so we knew who the people were that were using the product, and we just went and got those merchants as quickly as possible, knowing they needed a solution. And so we got velocity early that was really reinforcing and the opposite of what we had just gone through with peer-to-peer lending. But the question of like, when did we knew we were going to make it? When did I know? I mean, on a daily basis, I told the team we were going to make it. But when did I actually know we were going to make it? I actually knew when we were going to make it when we were successful at buying TD Bank's home improvement lending division. So TD had a home improvement lending division that was competitive with us, but we knew we were better than them every day. And I had a connection to the person who ran it. We spent about a year negotiating with them to get them to sell us that business. We put a deal together that might go down in history as the best deal I'll ever do, which, ended up being highly accretive to our business, doubled its size overnight, and just got us on the radar of a lot of people who, could see us bumping around making noise, but didn't really get that we were serious. And then when that happened, everything kind of like raced forward. Goldman Sachs reached out, and ultimately Goldman ended up taking a big position in the company. We put a couple of new lenders together to help us execute that strategy that we then grew, to billions of dollars. And so it was my turning point of knowing that I didn't have to keep faking it till I made it. I think we were going to make it.
Wow, what a story. John, we'll go in here.
Remember that deal, and I remember, what is interesting is, Matt, how many times have you seen, and let's just use fintech as an example, where the response is, oh, one of the banks is in this business, no chance, get away from it and try to find those businesses that the banks don't play in. And this is a great example where Michael went after it. Now, it obviously was a business that was a smaller business, but they didn't pay attention to the business, and they knew that Michael operated the business. I actually think this was a very smart move by TD Bank, in fact, to not waste, your time and resources and energy. But that always that fear of going up against the incumbents, Michael didn't care. And, I hear this too much in Canada. In Canada, we do have a bigger oligopoly issue, no question, and the regulatory capture here is more important. But in a number of these industries, whether it's telecom, media, et cetera, we're already seeing the big dents occur, and it depends on which financial services business you might be in. If you were to speak to Stephen Smith, who has a very dominant share of the mortgage market in Canada, he'd say, yeah, well, I'm not part of the big banks either. So I think this is a great lesson for entrepreneurs that if you've got a great, superior product, don't be afraid just because there's a big, monolith of a competitor out there.
Yeah. I mean, keep your friends close and your enemies closer. I mean, Michael, did you have a corp dev team like to do a lot of the work for you? Or did you think about this from day one? I was going to manage this relationship and bring it home.
Yeah. So in my heart, I'm a corp dev and business development person. Like every CEO brings a different talent to the job. I'm a truly terrible operator, but I'm really good, in my opinion, at corp dev and business development. And so that's where I've focused to try to drive value for the company. And I've surrounded myself with people who are excellent operators and who are passionate about making operations work. And that's been a little bit of my success.
Yeah, I think it's a great lesson, John, especially for like Series B companies, Series C companies. You have one, John, like Myovision, that's going on the offensive, buying up, competitors, inorganic revenue growth, but finding ways to solidify themselves as the number one or two. And obviously it worked out for you, Michael. I mean, last I heard, Financeit was doing roughly $400 million in top line revenue and around $100 million in EBITDA. I said that right, John, EBITDA, including a $4 billion loan book and $2 billion in original annual originations. Michael, congratulations, but why not take the company public?
Well, first of all, I can't comment on any of those numbers that you just reel it off. You're a good investigator to even be able to track that kind of information down. That said, let's assume that you've got it, relatively right. Why wouldn't we take that company public? I actually love the public markets in Canada. And I think the public markets, even though I know there's a lot of criticism from people who say public markets are a bad way of managing the next stage of your company. It's not an exit. If you look at it like an exit, you're already, in my opinion, doing it wrong, right? Oh, this isn't meant to be an exit. This is meant to be a platform that helps to support the next level of your growth. I think if you structure things right, and again, this is my opinion, I think if you take your cash flow and throw off a distribution so that you're rewarding the funds that hold your stock and give them a better story to tell their retail investors, as an example, I think there's lots of ways you can use the public markets effectively. But the single most important criteria is you have predictability on a quarter by quarter basis of your key metrics. And the challenge with being a company that's in growth mode, like ours is that not all of your predictability metrics are in place just yet. And if you have a couple of quarters where your bullish predictions, let's say, you got a corp dev leader who's always overly optimistic on the things he's going to achieve, right? You want to be really, really careful making those guidance predictions to the market, because you can easily spook them. And without enough operating history on the organization, enough reporting history that they can stay aligned with you, I think you can get abandoned on the public markets if you're not careful. And so it's just really, really important, not just to have the aspiration of getting there and to have the metrics to support it, but being super disciplined once you get there about how you provide guidance and then how you hit that guidance.
Wow, if only all founders had that self-awareness on what it meant to be a public market, a founder CEO, John.
Yeah, exactly. Michael, would you be prepared to discuss, you shifted your business again with a deal that had originally been announced with Goldman Sachs. And it involved Apple and what they were doing to become a financial services powerhouse. Would you be prepared to kind of discuss what the thinking is and what happened there?
Yeah, no problem at all. And John has a little bit of this inside because he drinks bourbon with me. I'm very focused. And so
you're bourbon buddies. I get it.
Yes.
But yeah, exactly. He's heard my woes. So listen, when Goldman did their majority investment in our company, a big sort of preceding logical leap is that these guys are rocking it in Canada. They got a great team. The U.S. market is continues to have a lot of energy behind it in the same field. The competitive landscape are just other companies like theirs. There isn't some big bank that's dominating things in the U.S. We're going to bring them in. We're Goldman Sachs. We're going to bring them into the U.S. They had just gotten a bank license called Marcus, so they had a cheap cost of capital. They had a lot of flexibility. They've got a great brand, obviously, and so we spent 2 years working with that new bank, trying to get their attention. And there's lots of things that they got distracted with, as you can expect. Every great opportunity would go to Goldman Sachs at some point. And so you're trying to start something from nothing and get their buy-in on it's going to start with like $1 and then gets to $1 billion and then gets to 800 billion, whatever. You need to keep telling them that story in order to keep them focused. But it was very, very hard to keep their focus on building this brand new thing. We got stuck behind Apple. Then maybe we were going to partner with Apple. And then I literally got a call on a Friday afternoon. It seems bad news always happens to me on a Friday afternoon. And on a Friday afternoon, I got a call from the partner on our file to say, hey, what's going on? What's new? And I'm like, well, let's get to the part where the bad part popping here. I feel like that's coming. And then he was like, hey, I just want to let you know that we've made a decision to buy this other platform in the US that does this thing that we're hoping to do with you. And as a result, we're shutting your thing down. I'm like, oh, that's kind of shit news. Is there like another part of the shit news? And they're like, yes, but we're also putting you up for sale. And I'm like, great. This is terrific. And so I spent the weekend. I didn't tell anybody on my team. I spent the weekend. I probably had a bourbon with John.
I think you had a Brandon.
and said, all right, like there's, cause I'm a relentless optimist, you get that analogy. There's a big pile of manure in the room and an optimist just keeps digging until they find the pony. I just spend the weekend digging to find the pony. And ultimately, it was hard. It was very difficult. We had a very difficult time. We thought we were selling prematurely. There was so much more growth, in what we could do. We'd spent 2 years focusing on the US market only to not launch. It was painful. But we ended up getting a great partner who bought the whole platform and has helped us to grow 4x in the last 2 years since buying us. And so, like sometimes good things happen even out of bad circumstances.
So, Matt, here's the next lesson for founders. When you're looking for your financial partner, right? Like a lot of people get seduced by the big fancy name. In fact, I will say when Michael told me about Goldman Sachs, my reaction wasn't pleasant. Michael knew that. And I just said, dude, you are going to be swimming with fucking sharks. And smart folks, but be really careful because they're so big and that things change. And unfortunately, it happened. And it landed Michael a spectacular partner, by the way, who was my one of my investors for Omer's Ventures Fund 3. Very nose in, hands off type of investors. So getting to know who your investors are so critical. And you want to know whether there is alignment, not just the big fancy name so you get to flog it. And here's a great example. And Michael, again, was able to withstand that. And again, if it wasn't for the situation of Goldman Sachs, I'm not even sure you would have been even this far because his new partner really allowed them to unleash with really no interference.
Yeah. I mean, I'm sure he wasn't talking to Mr. Goldman or Mr. Sachs or probably even, David Solomon, obviously. So that's obviously something that he was just relaying through the messenger. Like if they change strategies at the top, it's going to change no matter what, Michael can say to them. And that's just part of the game when you sign up with these guys.
Yeah. And I think that's all very fair, both Matt and John. And John was on the record. I've lost a few bets to John. I could have lost a bet here too. On this, just in case you're wondering about my batting order on bets with John, don't ask. But I was certainly seduced by the idea of working with a partner this big with as much brand heft as they had, and we had a good run, right? But to John's point, the new investor that we had is laser focused. This is what they do, is back platforms that do this. They certainly were helpful in saying, let's not focus on the US. Let's call that a failed experiment. You had this amazing opportunity in your domestic market. You could literally own the whole market with a little focus and time, and that'll reduce your OpEx as well. And we can just focus on profitability. Those are all the right coaching tips for what we needed to get done. And it's been a good part of the journey. Hard beginning part of the journey, but a very good outcome so far.
That's awesome. I want to shift to a bit more of the macro side of things. So Financeit, as I mentioned, is the largest point of sale lender in Canada for home improvement, dominating 92% market share for home improvement financing. You're like the bellwether for consumer lending. What big shifts are you noticing in today's economy?
Yeah, I don't know if you've seen, but there's this crazy U.S. president who's not making life very easy for. I don't know if you guys have been watching that. I don't know. Most people have. It doesn't matter. Yeah. So, I mean, it's interesting that in 40 days, the U.S. has gone from a GDP production of like 3.5% to possibly less than 1%.
Yeah.
I mean, that seems like an overwhelmingly bad outcome.
If the 3.5 was real, just to be clear, if the 3.5 floor was real. Yeah.
Yeah. And so obviously tariffs hurt everybody. They hurt our industry of home improvement. Manufacturing is predominantly done in the United States and China for a lot of the raw products that go into home improvement, whether those are, roofs and shingles or furnaces and pools. And so anything crossing borders back and forth, especially multiple times during the production process, is going to be affected. And that is inflationary, and inflation curbs consumer confidence, and consumer confidence drives sales activities. And so all of this is bad news in many ways. And we'll see how long it lasts for, given that it's going to be bad news on both sides of the border. There's no good news for anybody in any of this. Maybe in 10 years, remanufacturing in the United States, but I don't see it either, to be frank, given labor and education levels and a whole bunch of other things that are going to make it very, very difficult. So everyone's going to lose with tariffs and inflationary upward pressure. Where it does help us in my business, again, digging down to find the pony, is that interest rates are coming down, not going up. Interest rates are coming down, right? And interest rates are coming down, bond rates are coming down. That's how we price capital. So if things are more expensive, people need payment plans, I offer payment plans. If cost of capital comes down, I can give some relief to borrowers. That helps, in driving the velocity of our product. So there are some things we're going to benefit from here, but you got to dig to get the pony.
But Michael, you're on the front line of the tariffs, because you're absolutely right. The home renovations is going to be a big potential impact. Any reaction in terms of how Canada is reacting to the orange man in the White House?
His face bursting with lies. Yeah, I mean, I think this is a galvanizing moment for us, and there are people picking up the mantle and speaking boldly, asking who we are as a country. And this is happening both in the private sector and in the public sector on all sides, sides of the aisles, inside of the House of Commons and at the provincial legislature. We're trying to define where we've lost our way a little bit over the last decade or so. And I think this is going to be an awesome moment for us. It's going to be hard. There's going to be issues. The government's going to have to be actively involved in many cases where specific industries are abruptly affected. But if we can get our shit together and think through things like interprovincial barriers, think through things like mobility of labor, think through things like protecting our north and driving, deeper holes in the ground to get to the raw materials and the things that make this country an incredibly rich and abundant country, diversify markets. Like if we do the work, I think that we're going to turn out better in the long run. It's a little bit like my story, where you get fired on a Friday afternoon, but you find a way on Monday to get back to work. I feel like Canada's at one of these crucial moments, and just calling out accolades where they're due. John and the CCI and a number of his other connections have put themselves front and center, taken a lot of people chucking shit at them. But they've had a loud, consistent voice on what this country needs to get better. And I think people are starting to listen.
Michael, there's this, short-term gain or short-term pain for long-term gain is sort of what it feels like we're going through here and dealing with the U.S. and dealing with our own issues here. Pre-pandemic, 2019, Canadian home improvement industry generated over $50 billion in sales. It was growing over 1.3% annually between 2015 to 2020. But then during COVID-19 years, we saw a huge boost to Canadians spending more money, obviously, and time at home, right? A lot of do-it-yourself projects were being done. Revenue in the industry peaked at almost $60 billion. And then we saw a huge decline, obviously, in 2022-23, down to almost $38 billion. So right now, though, where we sit right now in the industry, do you think we're bringing ourselves below COVID-19 levels, but people are going to be set up for a much better long-term duration of, managing their own finances? Because if we kept the same pace we were during COVID, who's footing that bill? We are. So isn't this a necessary thing to happen in a deflationary environment, lowering our interest rates and maybe having short-term fluctuations in input cost?
Yeah. And so you're specifically asking about the home improvement industry, correct?
Well, that's what you know most about. Yeah. And then how it equals to the rest of the economy.
Sure. So, I mean, on the tailwind side, 70% of the asset value of almost every household, the average household in Canada, sits in the value of their home. And while to a certain degree, that's a bit of a crisis, right? It showed more diversity.
Not like the US. Yeah.
Dead capital.
Right. Yeah. But in the end of the day, people are terribly invested in keeping their home and improving their home and maintaining their home. So if furnaces break or roofs leak, guess who's there for you? Us, Financeit. We are there for you, right? To help you to solve that problem in that crisis moment. And if you're trying to enhance value of this thing that dominates the asset value of the home, again, by making improvements, extensions, putting pools in backyards, whatever it is, again, we're here to make that affordable for people. And we would argue it's a good investment, right? This thing's just, knock on wood, continue to go up in value, maybe not by double digits, but even by single digits. And that justifies expenditures around maintenance and improvement. So I think that's good. At the same time, we're hearing provincial governments talk about incenting that type of behavior. I heard that Doug Ford is positively looking at putting the home improvement credit back in to incent people to undertake this work. Now, good news. That's jobs. And that's manufacturing encouragement in raw materials here that ultimately could turn into materials that go in or in the home. There are lots of good manufacturers in, let's say, the pool and spa space that are based out of Montreal, in shingles based out of Northern Ontario. There's lots of domestic manufacturing that will get a benefit from this type of spending activity by Canadian consumers that benefits both workers in Canada as well as raw producers in Canada. All of this is good news for you.
Michael, it is interesting, though, the raw materials for the home improvement industry, much of it is being sourced in Canada, lumber, minerals, and yet we're extracting the materials, sending them to the United States for processing and manufacturing, and then we're buying them back with, the offset of the low interest rate is a further shrinking of the Canadian dollar. So massively increased prices. Is there not an opportunity, as you see it, to actually verticalize the industry in Canada and use our own raw materials to at least not perhaps do any low-end manufacturing in the housing sector, but maybe there's opportunities for very high margin type of goods and not rely on what we're doing right now, which has made us extraordinarily vulnerable to the United States.
Yeah, so I think two things. One is that there's a couple of places this is already happening. I think we are the single largest builder of hot tubs and manufacturer of hot tubs in North America. For some strange reason, we do hot tubs exceptionally well. Little pat on our back for the hot tub industry, right? Maybe it's because it's cold out and hot tubs are helpful when it's cold out. Maybe that's the motivation that's worked for us. But so there are some places where we're already clear winners. Necessity is the mother of invention. Now, if you take a bunch of raw materials, you send them to the States, they get a tariff of 25 to 50 or whatever the next crazy number out of Trump's mouth is. And then we're going to buy them back. And then we're reciprocally going to tariff them at 20 or 50 or whatever crazy number we come up with. At that point, there's a huge opportunity for someone local that's cutting down trees and refining them in a local mill to say, you know what? Why don't we start building some shit here? Because we just save ourselves all of this input cost and transportation costs, and we can support a local community. And now, given that the best alternative is we buy this thing that's up, 150% in final cost to the consumer, now there's margin for us to support our labor costs, which are higher, and some other things about, capital costs, which would need to be there to take a manufacturing plant out of a raw refinery. Those are all, I think, increasingly opportunities. And I mean, that's the ultimate irony of a tariff war, is that you actually help your customer to diversify away from you, which is long-term stupid, which is why the Wall Street Journal is saying this is the dumbest trade war ever.
Let me just play a bit of a devil's advocate here on the size difference between our two countries and why there is this sort of conversation in the first place. An average Canadian consumer spends around $1,300 a year on online purchases. An average American consumer spends almost $10,000. Okay, the home improvement industry in the U.S. is almost $600 billion, where ours is $50 to $60 billion. So you got a 10x difference in the market size. Yes, you obviously can deglobalize and onshore a lot of the manufacturing processes locally in Canada. So how many hot tubs can we sell in Canada every year versus how many hot tubs can we sell to the US? If you have to pay 25% to get those hot tubs down to the US, you're still going to do it if you can sell 10 times as much. My point being is, are we really talking about drastic changes to our entire manufacturing industry when we still don't have the demand of the market to make up for the changes of cost and infrastructure investments we have to make locally to offset that 25% thing? I don't think so. So we're still going to bite the bullet if we really want to access the market. And right now, that's the toll that they're saying we have to pay because we are 1/10 the size.
Yeah, man, I don't disagree. I mean, it's not like, so right now, province of Ontario exports 75% of its goods to the United States. It's not going to zero. Could we get it down to 50? I don't know. But here's going to be the challenge. People have been accustomed that the auto industry, which accounts for a very sizable portion of jobs, and not just that component, but the supply chain around it, if that goes away, and I think that we need to plan for it going away, despite, kind of like what Michael did, like assume that thing is done. What fills that gap? What fills the manufacturing capacity? So I guess the point only is, if we're otherwise going to procure stuff that we're already not building, I think what Michael is saying is this might give us a good excuse, not low-end manufacturing stuff for certain. That's a fool's game. But does it incentivize us to say, you know what, maybe that there are critical supplies that we need to start building here, but it certainly can't replace everything.
The reason why we have car manufacturers in Canada, I'm sure you know this, is because Canada imposed high tariffs on imported vehicles up to 35% by the 1930s to protect its own domestic car industry. So American car companies like Ford, General Motors, and later Chrysler set up branch plants in Canada as a way to avoid these costs to sell cars into the Canadian market, right? So I think we're going to see the same thing just the other way. Don't you? And then we end up losing those jobs in Canada. The Canadian that want to make hot dogs in the U.S.
Don't use the examples of things that we're already doing. How about for industries that are already gone?
Hot tub manufacturers in Montreal or Quebec. Mike, are they going to continue making them in Quebec?
Yeah. But the point is there, what we're doing from a manufacturing process perspective today is, other than autos, is very, very small. I think the point, Michael, is if we're producing nothing in a number of industries, absolutely zero, is there an opportunity to reconsider the math of producing something in this country that we hadn't before?
Agreed.
That was really the point, Michael, that I heard. But ultimately, but then the things that we are already exporting from a manufacturer perspective, Matt, your point is, those are going to get hurt, and you're absolutely right, because they're going to lose a market. And when I hear pundits who say, oh, no problem, you just move the markets to Europe. Has anybody seen the shit show that Europe's in? Like, China's going to be in a shit show? Like, the world is in a shit show, folks. And do you know how long it takes to move your supply chain or this is not a matter of months. It's years and decades here, right? So you can't turn it on a dime.
Agreed. And I think, we're not supposed to be agreeing on everything, John and I. So we're going to have to rustle it.
Yeah, we'll let each other soon.
Okay, good. But this is Adam Smith economics. Globalization really works to get things down to the lowest unit cost for the benefit of everybody, and every market specializes the thing they're good at. It all works until some asshole comes in and says, hey, screw that, right? This is imbalanced. Whether it is or not doesn't matter. They just have to say it. This is imbalanced. We're going to start putting tariffs off. And then the whole thing starts to break down. Now you got a whole bunch of manufacturing in a certain sector that you happen to be good at, hot tubs in Montreal, just using the example, where you're right. They're going to be motivated to find a plant in the United States to service that market, right? And they're going to begin diversifying their business into multiple locations to try to be efficient about taxes. Well, the reverse is going to happen in a whole bunch of other industries that the United States happened to dominate for the longest time, where we shipped a bunch of raw materials into the US, which I think happens more often than the manufacturer of the hot tub example in Canada. Mm-hmm. So ironically, we could, if we're smart and we're focused and we get entrepreneurs and enable them to be wildly successful, we could end up building a lot more domestic manufacturing in places we'd kind of given up because Adam Smith convinced us to. So
yeah, 100% agree. I don't
at a higher consumers. That's the other thing.
It's inflation.
It's inflationary. That's going to be the thing. So everyone will feel the pain to some extent because the cost of living will go up clearly in Canada and also in the United States under that example.
So, Michael, you've worked in government before. You were a former parliamentary assistant before. You've been, supportive of the Liberal Party. Obviously, we've got some big changes coming down the pipeline here. What do you think is going to happen? And what do you hope to see maybe from the next government, whether it is, Carney potentially or Pierre Poilievre, to change on terms of the regulatory environment or policies around fintech and innovation in Canada?
Yeah, well, there's a lot in that question. So I'll unpack it a little bit if I can. So I think that what's right and what's left and what's liberal and what's conservative, even what's Democrat and what's Republican, it's like no holds barred anymore. That like what you thought was a thing isn't a thing anymore. Like you thought that like what conservatism isn't. My liberalism was a 1993 to 97 Chrétien, Paul Martin. We focused on balancing the books. We focused on, trying to deregulate. We reduced taxes. We stayed out of people's bedrooms. Those are the things that attracted me to the party at the time. If you think, ironically, it was the Mulrooney conservatives that were just a runaway train of deficit spending. And it was the liberals who brought common sense back to government.
Quite ironic.
Right? Free trade, being focused on supporting innovation in businesses, et cetera, right? I mean, the liberals of today aren't governing themselves in any way as a relationship to that party that I was attracted to. Part of that is, I think, the influence of the leader. I was never a big Trudeau fan. From a policy perspective, I don't know the guy personally, I don't have an opinion, but from a policy perspective, I was never a fan. And then he had to go hard to the left in order to maintain this coalition government that did what they could to stay in power, but ultimately just kind of parted ways with the things that matter to me. And so even though I was a liberal and still at my heart think of what liberalism means to me, I think that the lines are getting really blurred. Like you could take the Red Book, which was the policy platform of the Liberals in 93, and Poilievre is like walking around with it. He's the force around. Totally. Walking around with it, right? And so, and whatever's happening in the US, I don't think follows any policy. Like it's just nut bar crazy what's happening. And I don't think that's republicanism in any way, shape, or form, other than like, sort of new Tea Party republicanism. But so I think that things are just a little mucky at the moment. To answer your second question, and so I think the corollary to that is find people who you agree with, doesn't matter what color they're wearing, and get behind those people and support the ideas that they have and that you think they have conviction to get done. That's how I would govern. That's how I'm telling my kids. If we have multiple colors on the lawn, as long as you can justify it, you can have it there. If you can't I'm pulling it down, right? Because I got kids who vote them. And so the other question is, what should the government be doing related to fintech? My biggest ask, and it's one that I've been supportive with the CCI on, is open banking, right? And open banking is actually, it's even the wrong word. It's consumer-enabled banking, where the consumer has control over their data and their data history. They can give it to whoever that they want in a controlled manner by a third party that allows them to get better products and services and cheaper prices on things. That should just be the way the country runs. Government's been talking about it for a decade. They've been doing nothing about it. My hope is that the incoming government's committed to it and implements it relatively.
It was only
fantastic.
It was only 7 years ago that it was announced that it was going to be implemented. So, come on, 7 years. You built your business over a long time frame. It's no problem.
Mike, we get built in 7 years. Come on.
How long you been at this for, Michael?
I started when I was 8. CommunityLend started in 2008. So if we think, it ran for a couple of years before its demise and pivot. And then this business started in late 2010. So I've been doing it for a bit.
So what do you think it is that makes Canadian entrepreneurs like you so resilient And also, what advice would you give to other founders out there just getting started in their journey to use that resilience to their advantage in troubling and maybe complicated times like we are facing right now?
Yeah, keep bourbon at your desk. Have a friend like John who just kicks the shit out of you from time to time and helps you to make good decisions. Yeah, listen, I think we're resilient because we're not the United States. We're a country a tenth the size. In many ways, we're much further behind in sophistication and capital. Not even 1/10, like 1/30th of the available venture capital the United States has. And so, as a country that is right beside and dominated by another country, you have to go harder. You work harder. You got to try to be smarter. You have to figure out ways to scale that don't have as much money as other companies that will be much better funded in your category in the United States for different reasons. Secondly, I think that there's a resilience that gets built here because we're afraid to fail. And there's part of this argument, and John and I might disagree on this. There's part of it that like people say, we should all just be willing to fail because that's where great stuff comes from. Like bullshit, don't fail. Find a way, get back up, take a punch, do it again, pivot. Don't pride, park it at the front door. There's no place for ego in companies that are trying to figure out what they're going to be when they're going to grow up. And I think that fear of failure, my parents in my head, Michael, don't fail, right? Okay, thanks. Super helpful. I think that fear of falling on your face motivates you to get back up again. And I think that builds resilience as well. I think that's a Canadian trait.
That's amazing.
Don't poke the beaver, man. Beavers are angry. I lived in northern Manitoba. Beavers are angry, shitty animals, right? And I feel like that part of us is coming out at the moment.
But don't feed the bears.
Yeah, don't fear failure, but also, never give up is sort of what you're saying, which I love. Before we wrap things up, Michael, we always ask our guests for their fast favorites. So first off, your favorite podcast.
The Daily. I love The Daily. As a political pundit, I just love it. And it's a little left, and I'm a little bit left, so I like The Daily.
Next is your favorite newsletter or blog?
Yeah, so I'm lucky enough to have a bunch, like the Goldman one and others, but Fourth Lane Partners, which is a Canadian, of course, asset management company, their newsletter is so filled with both charts and wit that I look forward to it every day.
Ken.
Yes, indeed. Yeah, Ken's great. I had lunch with him about a month ago. I'm really impressed with what they've built there.
I'm surprised you didn't unsubscribe from the Goldman one after you got dumped by them.
No. I need their information. If they're giving it for free, I'll take it.
Nice. Next is your favorite tech gadget?
So I wear a watch that tracks all of my movements and forces me to get off my ass when I've been sitting too long and move around and burn calories. And I need that. So it is probably the best gadget I have.
What about your favorite new trend?
Longevity is my favorite new trend.
Goes hand in hand with your watch.
It goes hand in hand with my watch and my age. And it forces me to think about, like, what am I eating? What should I be eating? Should I listen to my wife about going to bed earlier? All this stuff is...
Which bourbon you should drink. It's perfect. It gives you all the great tips. Next is your favorite book.
So I'm going to go with The Unbearable Lightness of Being by Milan Kundera. It's political. It takes place in Prague during the Prague Spring. So it forces you to have to know the political context of what's happening. It's poetic because he's this poetic writer, and it's racy. So what else do you need in a book?
Yeah.
To prejudice?
I think we already know the last one because you just mentioned it, but what's your favorite life lesson?
Yeah, I mean, my life lesson, again, my parents did a great job of teaching us core values, in my opinion. They always taught us to be thoughtful, to be productive, but most of all, to be kind, right? Be kind to people. You don't know what's happening in people's lives. Don't be an ass, right? Be kind. And I think the world could use a whole lot more kindness at the moment.
Yeah, absolutely. Well, thanks so much for joining us at the Tank today with Michael Garrity, Executive Chair and former CEO and founder of Financeit. Thanks, Michael.
Thanks, Mike. You're welcome.